Campbell's already said, for those of you that heard this morning, going to be trading the Morning Glory trading strategies. These are developed here at Master the Markets by the elite team, and we're looking to roll those out here on a live basis this morning. So we'll be calling out some trade levels, so you can, if you should so want to have a look at the exact levels that we're trading, will be all in the chat box this morning. What else do I can say? So this morning we're going to be running the live session. So that's going to be happening first thing. We're going to be running some orders. We'll run those orders. The reason we wanted to run the webinar through to mid-morning was because we can help to oversee those trades and start to manage them with you as well. So you can get a feel for how we're managing those opportunities, not just getting into the market. And then a little later on, I'm going to be running through a presentation on an end-of-day trading strategy. But we'll do that at around about 9:30 a.m. once we've gone into the market. So what I'll do now, without further ado, is hand over to my colleague, business partner and brother, that's Thiru, and I will be very happy to hand over to him. He will walk us through the analysis of the currencies we'll be trading this morning with the potential opportunities. And of course, if there are any questions as we go through the session, feel free to punch them into the chat box, and at the relevant times we will be more than happy to answer those for you. So what I'll do now is I'll hand over to Thiru, so bear with me just one moment while I do that.
Hello everyone, very amazing morning to you all. Can you all hear me okay and see my screen all right? If you can, just type in yes. Yeah, okay, I can already start seeing a few answers all coming in. Okay, that's really good. See some really new faces here as well. That's really amazing. Okay, so for those of you who haven't heard me, I mean, we have done numerous regular presentations on RTC. Simon does an amazing job really organizing them, giving us a good opportunity to really share all our trading experience with you guys, all in one Notion, to serve you all and to make sure that you all become really good professional traders. Okay, so today is going to be all on live trading. We're going to be analyzing the market in real time. Just to give you a brief, my name is Thiru Nagappan here, founder of Master the Markets, Elite Traders Conference, and the Traders Open Day. We'll talk more about ourselves later on, because I think the most important thing here right now, we are here for trading, and I want to give you as much as value as possible that will help you boost your own trading performance and really give you lots of insight into the market. Just to get the things right, right from the start. We are real traders over here, so we'll just tell you the truth of trading as it is. Sometimes it might be a bit difficult for some people to accept that because of what they've heard from other people or the hype that is going on there. But we'll just tell you the truth as it is, because in the essence, it's good to know the truth right from the beginning, so that we inculcate good habits and for you all then to achieve consistent performance and consistent profits. Okay, so now let me go straight into the markets, because we need to place the orders before 8 a.m., just before the UK session starts, the European session starts. I'm taking a look right now on cable at the moment, okay, on cable. Just a quick one just before I carry on. If you all can just punch it into the chat box, how many of you are beginners, how many of you are intermediates? For beginners, if you just type in BEG, intermediates, you just type in INT, so that I know how to tailor my presentation as well. Okay, right, great. So carry on. It's going to be more for intermediates, but then I'll also point you to certain links that we have that you can also learn the beginner stuff as well later on, that we have prepared. Okay, good. So right now here in this time frame here, I'm looking at the 1 hour time frame, as you can see on the far left hand corner over here. Now the 1 hour time frame on the cable is what we're looking at. But do remember, along the way I will be explaining about time frame correlation. We need to correlate the time frame so that we understand from the shorter time frame to the higher time frame how they all are correlating. The whole idea of formulating your parameters and your rules is to formulate an edge, but before you formulate an edge, you need two important factors before you even formulate a strategy. Okay, we'll go through these two factors later on. For those of you, you can write down this question. What do you think are these two factors that you need before you even start formulating the rules for a strategy? What are the two factors that you need before you even formulate the rules for a trading strategy? Most traders wouldn't know these two factors. If you don't know these two factors, it's a very low chance you'll be able to make consistent profits. And the second thing is that a lot of professional traders even do not have their edge defined. Okay, so this is very, very important. Do not have their edge defined, and this is what I'm going to be helping you all do along the course of these 3 days in the live trading week. Now let's go and take a look now on how we prepare the charts actually before we start to trade. Now what I have over here is a couple of lines and levels that will help us map out the price route for the day in terms of the highest probability. Now let me go through this. The first thing what we do is in the morning, as you can see, this is 1 hour charts from 12 a.m. to 8 a.m. So this is 7 a.m. 1 hour bar, which will bring us to 8 a.m. right? Now in this broker that I'm using, INFX, you can see that these bars are all 2 hours ahead, so I just have planned them accordingly. So 2 a.m. bar will be a midnight bar, and the 9 a.m. bar will be the 7 a.m. 1 hour bar, which bring us to 8 a.m. Now the first thing what we then do is we calculate we put these lines over here called the R, and the R basically means range. Okay, the range, and the range is basically what we are looking at is the highest and the lowest point between midnight to 8 a.m. okay, or from the 12 a.m. 1 hour bar to the 7 a.m. 1 hour bar. Okay, so you got 8 bars in altogether for the range to form. So now you can see that the highest point of this range over here for me is this particular point over here at 12179 on the high of this bar, 12178 to be exact, and then the low of this one will be 12127. So this is where my two bold white lines are, as you can see. Okay, so right, so that makes that clear. Good. So now let's move on. I'm just going to bring the R a bit more down so that you all can see that. Okay, great. So you can see the R on both sides, yeah? Now, the next thing that we are then going to be looking at is the 1 hour swing high points. Okay, the 1 hour swing high points, as you can see. Now, I'm just going to move that a bit more further so that you all can see it. Okay, now the swing high points is very controversial to many people because it's very because many people can say, you know, look at a chart, you can say that that's a swing high, this is a swing low, and basically then in a classroom, let's say if you're teaching that, or in a traders who are trading a particular screen, if 50 people are trading it, and everybody will have different answers. Some people will say this is a swing high, this is a swing low. So how do we make it consistent? How do we make it non-subjective so that your parameters, this is very important, which we'll be going through later on, your parameters become quantified, and therefore you'll be able to consistently execute for your statistics that you get later on to be valid and significant. Now, if either one of this is not done, then your whole trading becomes inconsistent, your confidence is lost, you won't be able to scale and reproduce your results. So in order to remove the subjectivity, we have a way that we have come up with, which is the Algo's formula that was taught to us by institutional quant traders to come up with swing high and swing low points based on Algo's formulas. And that's what the indicator here tells us, which is the swing high and the swing low points over here. And that's what I've put over here on the 1 hour swing high over here. You can see the levels over here as well, 1 to 178, 1 to 135 over here that we can see in terms of the swing high and the swing low levels based on the 1 hour time frame. Okay, so that's what we have at the moment. Okay, good. So that's the next one that I draw in. Then, of course, then I go up another level higher. I draw up the 4 hour swing high and swing low levels as well, which you can see over here. When I go to the 4 hour time frame, it gives me the levels and the arrows, as you can see, on where the 4 hour swing high and swing low levels are, 2431 to 198. And I've put it over here, as you can see, 2431, which is over here, and 2198, which is over here. You can see 4 swing low, right? Okay, good. So that's what I've done. Now the next thing that I do is I also formulate out the previous daily high. The previous daily high, as you can see over here, 2269. That's the previous daily high. Between this blue line and that blue line is yesterday, so 2269, and then previous daily low, and that will be the point 2119. Do remember that everything that we're doing over here is all based on price alone. Okay, right. So you can see that I've marked out that, right? So I've marked out all the 4 hour swing low, 1 hour swing levels. I marked out the previous daily high, previous daily low, right? These are very critical levels, by the way. I'll be explaining why they are later on. The next thing is then I would then map out the ranges, like the ATR ranges for the day. Okay, two critical things that we are really looking at is what we have found that the highest probability for the price to do almost every day on an 80% probability is 0.7 ATR, and 0.8 ATR, it usually does it on a 68% probability. We got all the statistics towards all of these numbers and figures. If you do not have the statistics of how much the price does along over a certain amount of percentage of time, then your edge is not there, your edge is not clearly defined, and your conviction won't be there in consistently executing your strategy, and also on why it should sustain itself and continue to make profits. The edge must be very clearly defined, traders. Good. So now the 0.7 ATR and 0.8 ATR is what I would now be marking out on the price charts. The 0.7 ATR level is what we look at over here. The 0.7 ATR, I will take it for my daily time frame. I would point to the previous day, not today's current bar that's forming. Daily time frame, every bar is a day. I would point to the previous day's bar, and the ATR 10 is what I'm using, and you can see over here it says it's 117, right? So from 117 I would do 0.7, 0.7 times 117 and 0.8 times 117. Okay, so now that's what the levels I have on either both sides. Okay, right. So as you can see on the top, so I will take 0.7. So 0.7, let me just bring it up over here. 0.7, as we can see, as I calculated, is 82 pips. So this is the lowest point so far. Remember the ranges I talked about, the lowest and the highest point until now for the Tokyo session, as some of you have mentioned it. So that's that's 82 pips, and 82 pips is about here where this white dotted line is here, and I'll do it from the top to the bottom as well, so for short and for long, and that would be 0.7 for us at 12097. Do the same thing for 0.8. 0.8 is 94, as you can see over here. That's a green dotted line which is 0.8, and then on the bottom I've got the 0.8 as well. Okay, so that's what I've done. And finally, the last thing that we then look at is the stretch levels. Again, the stretch levels. Now the stretch requires a bit more explanation, but in simplicity, what it all means, it's a reference of levels to the open price. Okay, now the stretch is what we call was actually formulated and made popular by a very big institutional quant trader who's also owns a hedge fund today called Toby Crable. How many of you have heard of Toby Crable? Type in yes or no if you have not, or if you have. Toby Crable was very famous for talking about the stretch and many more, like the NR7, IDNR4 and all that. Okay, okay, I'm getting a few answers in over here. I won't be surprised if most of you haven't heard, because retail traders usually don't hear about them institutional coins. Okay, I can hear some of you. I can see the very minority of you have heard of him. So now, what does the stretch really mean? The stretch really means the number of pips from the open. In actual definition, the stretch really means, in terms of when you're looking at the daily time frame, what it really means is the nearest extreme to the open. Okay, the nearest extreme to the open. So if you look at this bar, the daily bar, right? The open is here, of course, as most of you know how to read the old Chelsea bar. The nearest extreme to the open is, as you can see, is the high, right? Rather than the low. Because if I were to strip out the close, it looks like this. The nearest extreme to the open is definitely this range rather than this range over here. Yeah? That's the nearest extreme to the open. And that is what we call the stretch. And to get the number for the stretch, what Toby used to do, he used to get all the numbers of this. So let's say this is 10 pips, let's say. And you would get that number for 10 bars, add them all up, get the average of those 10 bars, and that's your stretch number. So we had all that programmed by one of our trader colleagues. And that's what we have over here, is the blue dotted line. And the equidistant one is the green and the red as well. Okay, so that's what we do have over there. And we have a certain specific number that we have found from our research, which I'll show you all the documents later on. Our research, that a certain number of pips, X number of pips, for cable especially, if it breaches that, then the range forms towards that side rather than the opposite side. So that level is what we have as the ST, and we have it equidistant from the top and to the bottom from the open price. That's what's important. Okay, great. So that's what we have at the moment in terms of the price. Okay, great. Okay, so now I've put all the price map and everything for you guys. Now it's time to now look at where we want to enter. Yeah, today, and also do remember that in terms of our bias and building our edge, we always usually form a bias every single day. Okay, and the bias is based on a few formulas. The bias for today, based on our formulas on the higher time frames, is towards the downside. Okay, is towards the downside. If there's no bias, we usually do not take the trades, because we're keeping our edge really strong and making our trades really clean. Because do remember, traders, at the end of the day, what is most important to you? It's not about just taking trades, it's about making money and putting money into your pocket. That's what's important. I'd rather take 8 trades in a month on one currency pair and make £2,000 to £5,000 rather than taking 50 trades and not even making a single penny. Yeah, so we want to take low frequency but high quality trades. All right, so the bias for today is on the downside, and we are going to be placing an order based on near to the range bar. Okay, there's a bit of formulas in there, but for right now I'm just going to give the levels in, and then we can take a look at how we actually will come up with the levels. This strategy that we're going to be trading right now for the next 3 days in the morning, as I'm going to call out the levels and show you how we do it in real time, it is going to be a bit advanced. Okay, so what I'm going to do, I'm going to give you all a bridged version, which is a bit more simpler later on, that you all can follow and execute. We've put them into presentation slides that you all can take away, and you all can sit down and you can trade as well. Okay. Does the bias mean trend? No, the bias doesn't mean trend. The bias basically means the direction that we are taking for today. Okay, you must have certain formulas that puts the edge towards your on your side. Okay, good. So I think with that said, I'm just going to give you all the levels so far. So the levels, what we do have let me just put it all to. So for cable right now, I'm looking at a short basically, and for the short, the entry what I'm looking at is 1.2144, stop loss 1.2183, and target is 1.2084. Okay, that's what we are looking at. All right, now I do have some questions coming up at the moment. I'll answer all the questions later on, because as we have to place the trades at the moment, I've already placed the I already put the order in for here in terms of cable. All right, I'm also going to relay that to my traders so that they can then place it on the respective accounts. Now, I think for some of you, you can either follow this trades and see how they'll plan out as an educational basis, or you can even take it on your demo accounts as well, on your real accounts, but just take it in terms of a learning process, or you can just watch it and see how it all plans out to be. Most important thing I really want you all to understand over the days is how we build the edge and how we build the strategy based on a high probability basis. All right. So these are the levels that we have today, and what we are really doing as much as we can in terms of formulating how the bar forms on the daily, we are projecting towards that from the 1 hour time frame. Okay, is what we are looking at. Okay, good. I think with that said, I'm also going to put in. Okay, I'm also going to put in the euro dollar trade as well very shortly. And then we'll put it into the chat box over here. I'm just going to mute myself for the time being, and then we'll resume the presentation in about 10-15 minutes time once you've placed all the orders. Okay, talk to you all soon. Okay, so can you hear me okay and hear see my screen? Right, I think some of you were saying like there's no audio or whatever. I mean, it was not that, because I remember I did tell you all that we were going to place the orders and we're going to tell our traders what levels we're going to put it in as well. And I also did leave a note for you all over here that we're going to place the orders over here. Okay, good. So we are back. I believe you all got the orders over here. 2144. There's a limit order is what we are placing over here. Some of you, if you caught it, the price was quite fast. So some of you might have missed it. But those of you who missed it, you can always place a limit order and wait for the price to then come back to that level. If it doesn't, that means you've missed the trade, but then you just log it down as what should have actually happened. Okay, right. Okay, so that's to do with those levels 2144, 2183, and 2084. I'm going to go on to explain now on the dollar, euro dollar right now, right? On the euro dollar trade. Now, on the euro dollar trade, actually, I tell you what, maybe I think Rishi can, I'll pass it on to Rishi, then he can do the price map for you guys, and then I can look at and tell you whether there's a viable trade opportunity here. At the moment, on our quick analysis, there's no viable trade opportunity because the trade risk is not in our favor. I will explain that much more in detail, but for now, I'll just pass it on to Rishi, who will give you the price map for euro dollar, just like what I've done, just to get you all used to what are the levels you should be looking at into the day.
There you go. I just noticed that I was talking on mute. So thanks very much, Thierry, for the initial analysis there on the pound against the US dollar. So we've got an initial trade on cable, which we are short on. So everyone should have access to that. And that was called already. So 121.44 is where we're short, and the stop loss and take profit are in the box already just there. Just finalizing my my little map here for the euro against the US dollar. You already saw a sample of that and how that looks like on Tiru's screen just there. So a couple of things we're looking at: previous day's high, which the euro dollar has already broken. In fact, there is another trading strategy which we actually also trade around the previous day's high and low, which is another version of the Morning Glories trading strategy, which we call HL. but that's not the one that's relevant here. Today we're looking at a slightly different variation of the same strategy. We're also looking at the previous day's high and low. We're looking at the range as well that the prices formed between midnight and 10 a.m. So you see that's also highlighted herein by this box as well. A couple of things that I'm just keying onto the map at the moment are the stretch levels and a couple of other key levels which we'll look to observe for the rest of the day. It doesn't look as though it's going to work in our favor at this time because the trade risk is a little bit higher than our criteria specify. So everything that we're doing really is very exact. We've already pinpointed exactly how much trade risk we want to take on any given trade. And for the euro against the US dollar, if we look at the current trade opportunity, we're exceeding 40 pips of trade risk, which isn't really an ideal, well, it's not that it's not ideal, it just doesn't fit our criteria. So it's just a trade that doesn't fit the plan at this time. So we'll go ahead and key on the rest of the levels, and then I'll give you a little bit more in-depth further analysis of that one and exactly why we're not taking that this morning. But what I will do as well in a short while is actually tell you the levels that we would have taken if we were to have taken that particular trade opportunity. But it doesn't fit the risk profile this morning, so won't be looking to place that.
Okay, great. I guess you all can hear me right now. Am I right to say that? You all can, yeah, okay, great. Okay, good. That's very good. Right. So what I'm saying over here is that the most important thing over here is the price levels, because that would determine how the price is actually moving in our favor, whether the probabilities are onto our side. Okay, the price map is very critical, but you also must know what are the levels that you should be looking at, and they must be quantified. I can't stress that. As we go along into the morning, we will be showing you the importance of why they must be quantified as well. Now I'm going to take on all the questions at the moment that we have done so far in the morning. Any of you following this trade at the moment, you would have been triggered in. Even if you missed the initial move down, it did retrace back and would have filled you in at the levels that we were looking at, which was 12144. Right, now let me see. There were some questions that were coming through. I know some of you, do you use okay, what are risk to reward and how do you find bias? Can you show us? Okay, you see, Tom, does the bias mean trend? That was an earlier on question. I don't know, I already explained. The bias doesn't mean trend. It means the direction what we're taking for the day in terms of the time frame. Now, in terms of how do we find the bias? Now, the bias you can form different parameters. We have come up with some which are algos based, which are like a few formulas that are inside there to get our bias, which gives us an edge and a higher probability towards that direction. A simple one, what you can then formulate if you want to, you can just use moving averages. If you say that, for example, let me just give you a very simple example. You need to keep testing this. So you need to say, let's say the 20 is below the 50 and the 100. then you say that I'm only going to take only short trades on the shorter time frame. Okay, this is just a very rough example what I'm giving you at the moment, right? Or another one where you can combine this. So let's say, for example, you got this one parameter here, and then you can say number 2, not only the 20 is going to be below the 50 and 100, which determines to me price weakness over here in this example. I also need a seller bar as well. I also need a seller bar. So you can formulate these 2 parameters, for example, and you can say that, you know what, that's how I'm going to form my bias. But before you start using it blindly, what I will highly suggest you to do is to go and then find out with these 2 parameters as your bias, what is the percentage number of times that trade or price goes in your favor to make its range in that direction. Okay, so that's what we are looking to see to formulate the bias. All right. Okay, good. Now, what are risk to reward? Now, that's actually quite a little bit basic. I think I would just cover it very simply over here. Now, what we're actually saying in terms of reward to risk ratio, basically, remember that we have our entry, we have our stop loss, and we have our target, right? So we have our entry, stop loss, and our target. Risk is basically from entry to stop loss. Reward is from entry to target. Basically your profit to risk. But this, remember traders, your profit to risk, right, is what we're saying, reward to risk, profit to risk, whatever you may call it reward. The most important thing here is that when we do it initially, it is known as expected reward to risk ratio. Expected reward to risk ratio. It's not actual, yeah? It's really expected, projected. Simply, the reward to risk ratio is basically your entry minus your stop loss will give you a risk, your trade risk, entry minus your target will then give you a profit. You've got to do either way in terms of whether it's a long or a short trade. Now, why do we do the reward to risk ratios? Because remember, as traders, as professional traders, what we're really looking for is cumulative profit, yeah, cumulative performance or cumulative profits. What we're really looking for in the long run. We're not looking at just one trade winning or one trade losing or 5 trades winning or 5 trades losing. We're looking for sustainability where you can make consistent profits month on month on month. Okay, this is what we are looking at. Okay, now in terms of that, so what I'm saying over here, because it's cumulative profits what we're looking at, we need this trade reward to risk ratio in our favor so that we are creating a mathematical model, right? A mathematical model where the losses that you take respectively in terms of a ratio is less than the profits that you're going to be making, and overall the reward to risk ratio, let's say, is 1.4 to 1, which is your actual one, over the number of winners to losses, can then give you a positive outcome. Okay, the maths must work, traders, yeah, because at the end of the day, you can't hide away from that because it is within the whole mechanism to make the consistent profits. Okay, right. So right now, as you can see over here, you can see the cable is going in our favor, but do remember, traders, that it's still nothing yet, because you know the trade is never finished until you basically close it out and bank in your cash. All right. Okay, good. Great. Now let me take on the next question. What other questions do we have? Sorry, Mr. Levels. The levels are actually the levels that you're saying, Alan, is actually in the webinar itself. Okay, I've already posted it in the webinar. Did you all get it? If you all got it, just type in yes. If you didn't, just type in no, so I know whether what we are posting is coming out there. Yeah, so you all are getting it, right? So the message that I'm posting out here, you all are getting it. So that's great. Okay, good. So those are the levels. That's, I think some of you were asking that. Okay. Do you use EA for execution? Ian asked that. Is EA? No, we don't use the EA at the moment. We are actually in the process of programming this, but we still use our manual finally to execute for now. Okay, all that, and people asking in sound, whatever. Okay, so risk to reward, I've already shown that. Okay. Did you move the stop loss, Bob? No, we haven't. We are still keeping the levels as it is. We also do remember, in terms of moving stop loss, time is also very critical. When we move the stop loss, is also very critical. And we usually only move the stop loss. We give the trade to move. We give certain time. We allow the volatility period to be over first before we start to trail the stop loss. And usually we start to trail the stop loss after 10 a.m. Okay. Right, now in terms of news, has anyone checked news today? Is any news coming out for cable? Let me just quickly just check that. Cable, Tuesday, January 10. There's no news coming out at the moment in terms of cable. Okay, right, good. So in any case, right, now before I move on to the presentation and give you all parameters that you can take away and you can also think about and look into executing, or even take out the parameters and use them in your own strategies to create an edge, one thing I do want to ask you all, is if there are two factors, what are the two factors that you must consider? What are the two factors that you must consider to build before you even build your strategy, before you even build or trade a strategy? What would they be? Right? Richard is saying money management. Okay. I mean, even before you put the rules to basically to trade the strategy, what are the two factors that you must consider before you even build it? Okay, let me put it in this way, right? Most traders actually struggle to get this, and out of all the 20,000 traders that we have coached so far, and then we have mentored and we have talked at seminars and conferences over the world, when I asked this question, to be very honest with you, it's like less than 1% really know the answer, and that's quite worrying, because without knowing this answer, most traders are actually being lost and they don't have a true edge to make it work. Okay? Now, let me put the question in a different way. So if you were to build a car, before you build a car, what would you consider? Before you even start building, before you even start looking for the engine, for the steering wheels and all that, what would you consider? So some of you are starting to say plan and idea. So let's actually build on that. What do we mean by plan and idea? What are we really saying over there? What's one question you would ask? What is one question you would ask before you even start building a car? And let's say you want to make money out of it as well. Okay? What is one question you would ask before building a car, and especially if you want to monetize it? Very good. Okay, so we got Gresh was actually saying that, you know, what is your target market and price, basically, isn't it? This is what you're saying over here. So what is a target market that we are looking for and the price? Now, that means I'm saying that before I even build a car, what is my audience that I'm building the car for? Is it a sports audience? Is it a family audience? Do remember, if it's a family audience, then am I right to say that the engine that I choose would be totally different? I would only be choosing, there's no need for me to choose a horsepower engine. Am I right to say that? If it's just going to be for the family? If it's going to be a family-based car? Exactly, right? So that first question is so important, traders. Yeah, what is the target audience that I'm looking for before I start building the car? Okay, so if it's going to be a family audience, there's no reason for me to buy a horse engine. If it's going to be a sports car, however, I definitely need a horse engine. Not only that, in a sports car, I don't need to build 4 doors as well. If it's going to be on the F1 Rally, I mean, I definitely do not need 4 doors. Definitely just 2 doors is more than enough, or even 1 door even for that instance. So you can see that question, what target market that I'm building it for, so that then I can then tailor to their preferences to make money out of it. Now that we understand this, now let's apply this into the trading market. Now, in terms of trading strategies, before you build the strategy, you must have 2 things you must ask yourself, okay? Now this is very important, and 99% of traders do not even know this, okay? And it's quite worrying, because if you do not even know this, basically what you're saying is that you're just trading blindly without any clear plan or a clear 2 factors before you even can monetize that strategy. So what are those 2 factors? What are those 2 factors that you must consider before you even start building your strategy? The first thing is what we call the concept. What is the concept of the strategy? What is the concept of the strategy? The second thing that you do need to consider is the objective of the strategy, okay? The objective of the strategy. 2 things, traders, concept and objective. Now let me explain this a bit further. The concept, when we say concept, what we are saying is that we need a concept that stands through time, okay? Now, a concept that stands through time. Give me some concepts, give me some examples of concepts of strategies that stand through time, that keep repeating itself, because that will give you the conviction that, you know, the market will repeat itself again and again, but probably it's your parameters that are not able to catch the market movement. Tell me a concept that keeps on happening again and again and again. No. Support, resistance, market cycles, trends. Okay, so I'm getting a few answers over here. Now, you see, you have to make it a bit more clear that you yourself are convinced and don't have any doubts. Okay, now let me put it in a way that all of you then would understand and all of you would agree. Now, trends is fine, but let me just put that in a clear picture for you all. Okay. Okay, great. Now, follow me on this. Now, a concept is something that stands through time. So we can say that, for example, if you look at the human population, ever since the birth of the human generation, we can say that human beings, right from the cave times to now, they get hungry, right? Now, that's a concept that keeps repeating itself. We all get hungry because we have physiologically, we have a stomach, which when it gets empty, then you get hungry. Yeah, it triggers this nervous system within us, and we start to get hungry. Now, based on that, and you want to monetize it, and of course, then you build the restaurant, you tailor to the audience, what kind of food they want, and all not, and all so forth. Same what in the market, you need a concept that repeats itself time and again and again. One strong concept that repeats itself again and again is that price does not move in a linear fashion. Price does not move in a straight line. Okay, price does not move in a straight line. Am I right to say that? I think all of you would agree in that, isn't it? There's no chart that you can bring up where just price is just moved right from the bottom all the way to the top, just totally straight, basically. Yeah, we have not seen charts like that, just basically like this, go all the way straight. Am I right to say that? Type in yes or no if you do not. If you do believe in that concept, then type in yes. If not, then you can also type in no and ask why as well. Okay, good. Yeah, most of you are actually all answering in yes for that. Now, so based on that, if it's all straight on forward, if it's all going in a straight, so we agree that it doesn't do that, right? So price, a concept that keeps repeating is price moves in cycles. Yeah, if price moves in cycles, now that's a strong concept, because ever since the start of markets, or ever since the start of price drawing, we always will see that price moves in cycles. Now this is the same when you map out any kind of equity curve for a business even throughout the entire world. There is not any business where it's just gone all the way straight up right from the beginning of its inception to the end, or to sustenance. Okay, you've never seen that all the way go up. It always moves in cycles. If it moves in cycles, the second concept then will be right, which is to say that if it moves in cycles, there must be turning points. If price moves in cycles, there must be turning points. It's inevitable. Now, traders, you have a concept that happens again and again and again and again, and which will continue to prove itself, and you have conviction in it at the moment and confidence in it. Then the next thing that you now need to do is to find the parameters, to mix and match the parameters. Now what you're doing is, like in the car example, you're looking to get the engine, the steering wheel, and the wheels to match the concept right now. In the car example was to match the target audience. Over here, what we are doing is that we are mixing and matching now the tools, or the parameters if you may, to then match to the concept to find those turning points. So what kind of parameters can I use? Will a stochastic help me to find a turning point? Will maybe an ATR help me to find a turning point? Will a CCI indicator help me to find a turning point? Now that's how we effectively form a strong, solidified strategy that builds you conviction and confidence, not only in the moment as you're trading it, but going forward as well. Okay, so that concept is very important. After the concept, now we know that turning points must happen in the market. Then the next thing, of course, then what are the parameters you must use, or what are the tools you must use to find those turning points? And then finally the objective. Now objective, what are we saying? Objective basically means what is the price movement that I want to capture? What is the price movement that I want to capture is what we are looking at. Great. Any questions so far? The price movement that we want to capture. Let me just ask you a quick question before you all put in all your questions in. Now, let's say, for example, in a cyclical movement like this, right? In a cyclical movement like this, if I were to say the price movement, okay, that you want to capture, what would you say in swing trading? Some of you would be swing traders over there, because we know the percentages that usually come in these audiences. Now you can see that in a swing trade, what would you say would be the objective be? What would you say the objective be? And do remember, traders, when your objective is very clear, it's just one sentence, and it usually comprises of 6 to 7 words. Maximum 10. What would you say the objective is? What do you think is the objective is of a swing trader in terms of capturing a move of a cycle? What do you think the objective is of a swing trader in capturing the move of a cycle? Any answers? Let me just type it in. What do you think What do you think is the objective of a swing trader? What do you think is the objective of a swing trader to catch? In terms of catching, the price move. Yeah, so some of you are saying, well, catch as much move as possible. Okay, now let's quantify this, right? How much of the move? That's a good start. So how much of the move? You got to question yourself now, and that has got to have an edge by itself. Okay, you see, all the answers that you all are giving are all vague. Because some of you are saying most of the movement in my favor, maximize the exit. We need to now, most importantly, quantify this. Okay, we need to most importantly quantify it. So now, just keep the answers coming in. I want to see, challenge yourself now, and I want you all to quantify your answers. And the best way of quantification to ask yourself, if you quantified something, is to ask yourself, is to tell yourself, do I have any subjectivity here? If I were to tell that to a room of 100 people, to a room of 1,000 people, will everyone get the same answer? That is the way how you quantify. Okay, that is the way how you quantify. Okay, I'll leave you all thinking on that. Okay. Quantify. Okay, so I'm getting a few more. Nothing is quantified. Everything that you all are given, nothing is quantified here. Okay, we're getting something. Uptrend. Pips from last swing and fibs. That is something, right? I mean, something that you need to do research on. But what is the pips from the last swing? There's a certain percentage that you need to have. Now, I tell you what I will do. I'll give you all this as homework. See how many of you can really get the answers to this, and you can search the web and everything, and you can see if you can get the answer in terms of what do you think is the objective of a swing trader in terms of catching the price move. Okay, so you all can go and do that as homework, score through the internet and look to find out, because you see, traders, this is the advantage when you hang around with professionals, because rather than spending years, and in fact to find a really good strategy takes you 10 years. That is the timeline that people have found out. To find a really good strategy that works, even in business or even trading or whatsoever, it takes you 10 years. But when you hang around the professionals, those who have done it, those who have done the legwork, those who have already moved forward and have seen the distance, then there's a shortcut to it. Okay, you can cut short the journey and you can get there much more faster. All right, okay. I'll give you all this as homework about thinking about the objective of a swing trader in terms of catching the price move. And tomorrow, then we will look through this again. Okay, definitely do ask me the question again tomorrow if I forget about it. All right, okay, good. Great, I want you all to challenge yourselves, but I guess you all are getting in the right direction, because you need to basically quantify it. So there's no subjectivity. This improves your confidence and your conviction. Okay. Now, in terms of more quality information like this, we have a blog on our page, on our Master the Markets page. I don't know how many of you have been. Then definitely do take a look at it. Really quality material, all totally free of charge. All our blog is all over there. You can also see some of the blog articles that I've posted as well. So all this kind of thought-provoking questions, all this kinds of some really useful stats are all put over there. We will also put more blog articles over there as well. Our marketeers who are looking after the page, only in the notion of just serving the traders and building the truth of trading is what we're here for. Building a good community of traders is what we are all after. Okay, good. Right, now let me just now go into today's topic. I'm aware of time, but before that, let me just quickly just do this. I just wanted to show you all one of the strategies that you all can take away today. I'm just going to quickly take a look at dollar Swiss. Cable is more or less in our favor at the moment over here, as we can see. Dollar Swiss, I'm just going to take a quick look at it. Bias is on the downside for today, but however, I believe our trade risk won't be really much in our favor. I'm going to put in the ATR very quickly. Just put in the ATR 10. It's actually 8. I'm going to put in at 1600. Okay, so 18. Okay. So, yeah, it's also not in our favorable trade risk at the moment as well because of this huge bars over here that's coming up. Okay, so I'm just going to leave that behind. Right. Okay, Tom, I think, let me see. Okay, yeah, Ian, I think that's a really, really good question over there that's come up, really. You're saying, why am I interested in teaching traders your age? You see, now this is really good because the thing is, I will never disclose to you our true age. What I will usually give you is the concepts, yeah? And you're absolutely right. And why should a professional trader really disclose it? Unless we are building traders who are all trading together a hedge fund amount of cash. Okay, and that's what we want to actually build. We want to build traders and good quality traders who can then execute our strategies, understand them, and then finally then put them towards a pool of money in our hedge fund structure. Okay, but in terms of age, like giving out the specifics, like for example, you got a really awesome point, because in terms of telling you how we come up with our swing high and swing lows, yeah, definitely I won't tell you that, right? Okay, in terms of a smart money indicator and everything. So in terms of that, no, definitely not. In terms of exactly why I'm entering and where I'm entering in terms of certain price bars and all that, yes, also I won't be disclosing that in public. You're absolutely right. But what I'm more than happy to share, which has also helped me a lot on my journey, which all the institutional quants also shared with us as well, is basically in telling us concepts that would then lead us towards finding the edge ourselves. Okay, this is what I'm doing over here for you all as well, giving you all these important points about being quantitative, especially in terms of removing subjectivity. Yeah, this is all very critical in terms of forming your bias. These are all concepts, yeah, but we're not totally giving you with a specificity. Like the bias, I give you some examples. That's not exactly the bias that we use, because we have tested out hundreds and thousands of permutations because of the programmers that we have and the research team that we have in the background. All right. So in terms of totally giving away the specifics, we can't, but I will give you the concepts that would lead you to finding your edge. Because you see, one of the reasons for this is because someone else along the way helped us, and I know there are Tirus out there, there are Rishis out there, there are dedicated other traders out there, there are our elite traders out there who are all beginning out to be, and I know the determination and passion that you guys have, and it's only fair that I just share that out there so as to lead you all towards the path out there. Yeah, but giving specificities and all that, yeah, you're right. We won't really tell you the exact age. All right. I hope that answers your question, Ian. All right. I'd rather use one you explain how to. Yeah, that's all fine. I'll give you one that that you can have. Algo execution. We use algos, of course. In terms of executing automatically, no. This question keeps coming again. Do you have an EA for swing high and low? We have an indicator that does it, Ian. And in terms of capital to make 3,000 to 5,000 a month, The short answer to that is that there are two ways you can actually come up with the answer for that. One way is through percentage risk management, looking at the drawdowns, maximum drawdowns it has, or you can look at PIP risk management. In terms of PIP risk management, on this particular strategy, on our 3.0 version, it's about 850 pounds drawdown that you have over a course of a year, or over 250 trades. Now, in terms of that, that means at least you must have at least 2,500 pounds at least in that account. To be safe, I usually would tell people to times 2 of that, and then they have 5,000 pounds at least in the account in terms of strategy, in this strategy. Do remember that every strategy would differ depending on what type of risk management you use, and especially the most important critical part is to find out your stats. And there are 2 critical stats that you must know of every strategy that you have before you know what capital to put into that as well. Okay. Those are things that you need to answer. I have answered that in quite a lot of seminars that I've done over here and abroad. Okay, good. So now I know some of you are asking for some strategies and all that, so I'll go through this at the moment. Okay, so live trading week, I'm going to talk about this strategy called stops to cash. If you've got any questions at all during the presentation or any questions from before, of course, do ask us. And just keep it on coming. Okay, I'm going to keep an eye on the market as well at the same time. I'm just going to make sure that this is on my other screen so that I can keep an eye on this. Okay, great, good. Okay, good. Right. Okay, next. Now, all disclaimers are already there. That's me, just to give you a presentation of how I look like. I started as a PhD researcher. I'm not going to go too much into this because I know I need to give you all immense value. That's more important. You can find out more about me on the website and everything, or in our webinars that we have done. Just a quick thing about me. I did this Make It Happen workshop, and that's really what really made a difference for me, because it was a goal-setting workshop, ancient wisdom for practical modern-day living. And that's where I really realized that I need to make money work for me, really. I realized my vision as well, you know, and that we need to free the time to do the things that we love. And then that brought me down to trading. And here we are, worked on a private trading floor. I mean, we coached over 20,000 people. We would do live trading seminars in front of people in person as well. And then we trade a company accounts, you know, and all that also forth. And after 1.5 years after doing that, then we left the place, and then we set up our own company, which is Vedanta Master the Markets as you know it today. Limited company is Vedanta Trading. The unique thing about us, I think, as much as you have already figured out probably by now, is we are totally transparent in everything that we do. As you saw the levels that we posted out, we manage the trades in real time as well until the trade is closed out. Okay. Research-backed system, so research is really, really thorough, as you will see over the next 2 days coming, and also open door support as well. Okay, you can email us any questions at any one point of time. We'll be more than happy to help and serve you. Okay, great. More information about us at mastermarkets.net. Yes, there will be some interactive sessions. Okay, we always do this. That's an amazing, amazing, amazing chance to win this Traders Essential Kit at 50% discount. So for all prize winners, you get a 50% discount to this T kit, which also includes a free ticket to our Traders Basecamp workshop, which is a beginner intermediate workshop. It'd be awesome to see you all in person and do more of this kind of practical stuff where it's really going to enhance your trading strategies to another level. I mean, that's what usually traders come and tell us. You know, nobody has ever seen to this level of transparency and this level of quantification that we talk about. Okay, good. In this session, we'll show you some live trading in real time. I've already shown you that already. But we'll show you more of that as we carry along. Stops to cash strategy review and a Q&A session as well. Okay, so let's take a look at this. Stops to cash, just to reiterate, it's very similar. It's very similar to what we did in the morning. The morning one is more advanced. This is more simpler so that you all can execute. Do remember I talked the importance of concept and objective. So this is the concept over here. The concept is that we are looking for a reversal contrarian move in stops to cash, driving stops out. This continuously happens in the market because stops are another word for what? Just basically buy or sell orders. If buyers and sellers are not filled, you won't get price movement. Okay, so this must happen. Strong concept, huh? So exiting on higher time frame, support resistance, other traders entries, model of small losses, more than 1-to-1 reward to risk ratios, and more than 40% reliability. Okay, but the main concept in stops to cash is basically it's a range-based strategy. Okay, it's a range-based strategy. Right, so it's a range-based strategy. Now, why is that range-based strategy a strong concept? Because you must understand, traders, that in the market, every day, price makes a certain range. Price makes a certain range. Therefore, that continuously repeats itself, because if the price doesn't make the range, what will you have on the charts? You will have just a horizontal line going through. You won't have ups and downs movements happening. Okay, and of course the horizontal line over there, there's no point, no one will be trading the charts anymore. Okay, so the price does make a range every day. It doesn't matter whether it's currencies, commodities, indices, the price will make a range, and then the tool that you can use to quantify that range is usually the ATR, and then a certain amount of that ATR is then what you can look for, and you can run some tests and run some statistics on it to find out how much of the time does it happen in terms of the common occurrence. Objective, as I've said already, over here is very clear over here, is to capture 80% of the intraday move. Okay, 80% of the intraday move. In other words, if you want to quantify, you can also say you want to capture 0.8 of the range. Okay, okay, good. Now, HTF is actually higher time frame. All right, it's higher time frame. Okay, good. Let's move on. Now, in terms of entries, right? In terms of entries, in terms of entries, what we are looking for in terms of stops to cash, the first thing what we're looking for is a daily time frame. So we go on to the daily time frame and we look at a price action setup. We check the trend. Okay, we check the trend, and then we use that as a bias towards the shorter time frame. Okay, as the shorter time frame. So let me give you an example. So if you had a parameter saying that a seller bar, right, as I mentioned before, a seller bar plus the moving averages being below 20, below the 50 and 100, then we would then take a short. Okay, so that's the bias what I'm looking for here. So the first thing what I'll be looking for is check the price action setup and check the trend. Okay, check the trend. Right, that's the first thing I would look for from the daily time frame. From the daily time frame, then I go on to my 1 hour time frame. I would then form my bias, and the bias, let's say I've taken it as a down, then what we are then looking for is a sell-off, okay, on the 1 hour time frame. Okay, we need consecutive bar patterns which are going further down, basically. Understand? Yeah. Now, once we have that, what we are saying is that in this strategy, what is going to happen naturally, traders, you all know that you would put those of them who are already gone short at any place over here. Other traders who have gone short already, what they would be doing is to cover themselves, they will have buy stops in the market, right? So this is all your stops stacking up in the market. What we are looking at in this strategy is for the stops to be taken out for the price to reverse. Okay, so for example, if the daily time frame were to tell me that the bias is up, right, and then I had a sell-off over here on a 1 hour time frame, now I'm looking for a reversal. Okay, then the next thing that I'm looking for is on the 1 hour time frame, for a reversal bar pattern to set up where it looks just like this, where you have a buyer bar where it's closing above. Now this is a very critical piece of knowledge because this is something that the institutional quants have found over millions of dollars of research. Just one tiny part what they have found is that over the 50% range of the bar, when a close happens above the 50% range of the bar, there's a higher probability that a reversal move is going to happen. Okay, it puts the edge on your favor. So that's what we're looking at over here. All right, closing above the 50% mid-range. Okay, so these are the 3 entry rules that we have. Next, what we are then looking for in terms of the stochastic is then we're looking for it to go below 20, right, pointing upwards. Okay, not only it's just got to dip down the stochastic, it's got to point upwards as well, just like that. Next thing is your reward to risk ratio. It's got to be more than 1 to 1. Okay, trade risk towards your profit target. And then finally, you place your order from 11 a.m. onwards. Okay, place your order from 11 a.m. onwards on the reversal bar. All right. Any questions so far? So we had 6 rules, right? So far, no? We had 6 rules so far. Do you all get that? Any questions on this particular 6 rules I've talked about? Stochastic on which time frame? Really good question. It's on the 1 hour time frame. Okay, this whole strategy is to be done on the 1 hour time frame. Okay. Anything else? Okay, good. If there are no questions, then one thing that I must do mention is that on the stochastic, as I mentioned, is that not only it's important that it just cross below 20, this is for a buy, right? We're looking for a long, right? Example long. Not only is it important that it crosses below the 20 because it's oversold, but it must also point upwards to show some kind of buying pressure coming back into the market. Yeah? Okay, good. Because there's 4 types of entry that you can do. I've also done another webinar on that. I think you can check it in Simon's archive. I think when you become a member of RTC as well. Okay. Okay, great. So now that just to check that you all been listening and a bit of interaction as well. This is our first interactive exercise for the gift of now to win a tea kit at 50% discount price. It includes a free ticket to Traders Base Scam as well. Okay, which is worth more than value of £2,000. So let's go for the first question. So, okay, good. Right, let's see. The first 2 questions what we have is where should a stochastic be when you take a short trade over here? And where should the reward to risk ratio be for a short trade as well? Okay, what should the reward to risk ratio be for a short trade? So let's see all the answers coming in for these 2 questions at the moment to win a tea kit, which includes a free TB ticket as well, where you can come and interact with us live in person. Okay. Right. Okay, good. So getting all the answers in at the moment. There's 2 parts to the question, so if you all can answer both parts, that'd be great. Okay. Okay, great. So I think we will give it out to, I think, so I've got 2 people so far. So I guess, I think the guys can help us out in getting the details. So far, I think I've got the people, which is Liam, Offenden and Bob B. Okay. If you want to just pass us your contact details, then our staff then can contact you. Just basically your email address and your phone. Okay. So then we can send the necessary stuff to you. The Traders Essential Kit. All right. Okay. Great. So that's to do with that. Now let's move on. Congratulations on winning those prizes. Now let's move on. Now the stop loss, right? So there's 3 parts to every strategy that you must be looking at. Now the stop loss, what we're really looking at over here in this strategy, is that the initial stop loss goes for the lowest point of the setup. Okay, remember that the setup can happen in 2 variations. One variation is where you have a sell-off happening like this, right? This is for go long, remember. And then we have a reversal happening in the market with this bar closing above this 50% mid-range. Okay, that's one way that the price action can occur. Another way that it can occur is through a price setup like this, where then the buying pressure then comes back in this bar over here, where then it closes above its 50% mid-range. Over here is just a straight line down. Over here there's a bit of a turning point that's happening over here. Yeah. So in either of these scenarios, what we would do is that we would put the initial stop loss for the lowest point of the range, which is over here, and over here would be over here. Okay, so that's what we are looking for, right? Okay, great. I guess that makes that clear in terms of your initial stop loss. Okay, stop loss is always segregated into 2 parts. Yeah, remember always that initial stop loss and trailing stop loss. Now, how are we going to trail our stop loss? We're just going to use a very simple time-based stop. Okay, time-based stop. We're just going to trail our stop loss every 2 1-hour bars. We're going to just trail our stop loss every 2 1-hour bars. All right. Okay, that's what we're going to be doing. Now, just to quiz you all, just to see if you all know or not, how many types of stop loss do you all know? How many different types of stop loss do you all know? There are 3 categories of stop losses. Do you all know what they are? Okay, I guess most of you are not really sure what the 3 different types of stop loss are. The 3 different types of stop loss, what we are really looking for, no, they are not, not initial stop, moving stop, no. Those are not the ones. So, what we are really looking for over here is basically the 3 different, you can take this down. The first type of stop loss is what we call a technical stop, right? The technical stop is where the stop goes behind price action bars, moving averages, support resistance points and all that, yeah? That's your technical stop. The second type of stop is what we're looking for is what we call your time stop, yeah? Which is what we're using at the moment over here. And the third one is what we call is your money stop. Money stop is very simple. All it basically says is that if the price, if you have made 5% of your capital, then or 5% of your capital, you would immediately move your stop loss to break even, right? Example like that, all right? Or you can say if the trade has already moved 1% in my favor, 1% in my favor, I immediately move my stop loss to break even. This is what we mean in terms of a money stop, all right? Okay, good. So that's what we do have in terms of 3 types of stops. What we are using over here is called a time stop at the moment over here. But the most effective stops, I kept it very simple over here. Do remember in our advanced ones that we actually trade in the mornings, as we're doing in front of you, we would actually trail the stop based on a combination of those 3 types of stop that I talked about. That's when your stops get really very strong and effective, and you use a combination of time, money, and technical stop. Okay, great. Let's move on. Great. Now to the target, right? So let's take a look at target now. The target has got to match with the objective. The target has got to match with the objective. Now, in terms of a long strategy over here, because do remember that we said our objective is to capture 0.8% of the range, right? 0.8% of the range, no? 80% of the range is what we said. Yeah. So in terms of that, you can either use swing high and swing lows on a 1 hour time frame, right? On a 1 hour time frame, and take a target from there, or you can use the X pips number of range. I would highly suggest and recommend for you all to go for X pips number of range. You need to find what that X pips is, and you can relate that X pips to a X amount of ATR. A good one to start off with would be 0.7 ATR. Okay, 0.7 ATR, and use the ATR on daily time frame, and that could be 10. You can use the number 10. ATR 10 is what you can be using on the daily time frame. So if I were to show you how that would be done, let me just show you over here on the charts itself. So if I were to show you how that would be done, basically in real time, if I want to find out the ATR 10, I put the indicator here, ATR 10. You can just go and insert it here. It's very simple. Most of you know that. And then put in the number as 10, and then it will pop up there. Put it on the bar of yesterday if you're trading for today in intraday, and you can see there's 117 over there. 117 pips is what we are getting if you look at the number when I put the cursor on the bar. 117, and then what I would do is 0.7 times 117 is what I would then be doing based on that. And the answer that you would get out of that would be 82 pips. 82 pips for today is what you'll be getting. Okay, 82 pips, and that's how I got my 0.7 lines over here, right? As you can see. Okay, so that is how we would get our target, right? And then we would do our target from the low to the top, just as how I measured my 0.7 ATR as well. So if you want to measure 0.7 ATR, for here, 70, what's the number that I just told you all again? 82 pips, right? So I measure 82 pips from here, and that would be 12187. You see, if I want to take a long one based on this, right? Remember, this is a very typical stops to cash setup, isn't it? We've got a sell-off over here, the stops are stacking up on the top over here, and then what I would do is I wait for a reversal pattern for me to take long. But do remember, I won't take that reversal pattern if it's already covered its range for the day, because that's what we're looking to capture. If it's already done its 0.7 ATR, I wouldn't be bothered to take it anymore. All right. So far, you can see my 0.7 is 12097. It's a few pips away, and 0.8 is just another few pips away from there as well. Okay. It's basically about, let me see, it's about just 8 pips away basically from our 0.7. Currently, right now, from where we entered from here to here, we are about 26 pips in profit. Okay, so far so good. Right, brilliant. But do remember, traders, that the trade is never over until you close it and until you're back in your cash. All right, so never get excited about anything, and do also remember that this is just one trade. It doesn't mean really anything. It's the cumulative set of trades and profits that really means everything for you. Okay, great. All right, now you have to, of course, test and adapt. Remember that I can be sitting here all day and giving you all the statistics and everything, but until you test and research it yourself, you won't have the confidence and conviction to go through and to execute your strategy consistently to make your profits and to pull through your drawdowns. Okay, you won't be able to do that. You must find your statistics. You're really convinced about it, and that's what we are really here to serve and support you all in towards, because most people are not used to doing it this way, because you're not doing it professionally and a methodological way. All right. Okay, good. Money management is one thing that you also need to definitely consider in terms of the strategy, you can either do a 1% risk management, which is very famous, or you can do a standard pit position sizing mechanism. Now, what is one main thing that you must know before you choose either one of them, or even if you're trading either one of them? What is one thing you must definitely know about your strategy before you choose between these two? What is that? And that one main factor will also tell you whether when your strategy is working and when it's not. What would that be? What would that number be? What would that statistics be, you would say? What would that number, what would the statistics be that would tell me to choose either one of these money managements? Or even tell me when a strategy is stopped working? Okay, I guess not many who really are getting something over here. Okay, so right, the one thing that you need to know, okay, I'll give you all this as homework as well. You all can go and find this out. Okay, you all can go and find this out over here. Okay. Okay, great. So now let me just type this. So what is one statistic that you need to know before you choose either of these money management techniques? And also another thing is what? Either of these money management techniques and one that will tell you when your strategy has stopped working. Okay, good. So I put a question in for everyone, so you all can take a look at that. One time, that's another homework for you as well, for you all to look into. Okay, great. Okay, so now trade examples. You can go and take a look at some of these trade examples over here. 18th of May, 5th of May, and 27th of May. That happened on cable at 11 a.m. Euro Yen, and also on dollar Swiss as well. Okay, let me see if I can pull it up. Maybe we can just take a quick look at it over here. So 18th of May is what we are looking at. Then we can look at it together. Okay, great. So this is a good example here, what we have. So this is how a real life example would look like. You can see over here, very straightforward, right? So there's a nice sell-off over here, as you can see. It went down all the way down, right? We're looking at the long over here, no? We're looking at the long. So you can see over here that there was a nice sell-off over here that happened, and then finally then we get a long, not long, but we get a reversal bar pattern setting up over here. You can see, as I've told you before, and you can see that that's closed above is 50% mid-range as well, right? And also you make, some of you technically call this a low test bar, right? Test is low and come back, bounced up again. Put a pending order for here, stop loss for there, and then your target as 0.78 here or 0.68 here, whatever it is that you have decided based on your statistical edge. Okay, so once you have all of that, then you can put it in and the order is good to go. And in this particular trade, I mean, we saw a really strong boost up from there and further on upwards from there as well. Okay, but this is just one trade, doesn't mean anything, but do remember that you have to go and test it and build your conviction as you go along with it. Okay, right. Okay, so that's one example over there, as you can see. over there. Okay. Any questions so far on what we have gone through on the stop loss, the target, and the entry? Any questions? Just type it in. The other examples over here, like the euro yen and the dollar Swiss and all that, you can definitely take a look at it at your own time. Okay, good. If you all don't have any questions at the moment, then we'll move on. And we move on to the second question for today morning, which will give you the amazing opportunity to win the tea kit at 50% discount, which includes a free ticket to Traders Base Camp as well. Okay, there's an amazing opportunity for you all to interact with us during the 2 full days where we'll be exploring more of this statistical points and more of these parameters where you can boost your strategy performance so that you can earn much more cash and as an additional income and passively as well. Okay, so that'd be amazing for us to and see you all as well, so that we can serve you all to our utmost best. Okay, great. So ready for the questions? Here we go. Now for long trade, how should we trail our stop loss? And the second question is, what's the objective of stops to cash? Okay, so these are the two things we're looking at in terms of the questions. For long trade, how should we trail our stop loss? And second thing is, what's the objective of stops to cash? Okay, so I'm having some answers coming in. Brilliant. Okay. Okay, I've got some answers all coming in. Okay, great. I guess person who got it straight away was actually let me just get the name right over here. Was Gus Gilbanks. Okay, so I'm just going to give off the prize to him. Congratulations, Gus. So you've got that right now. So basically, just send us your contact details, your email, and your phone, and then we'll be able to then contact you and send you the details, because we need to get some shipping details from you guys as well. That's why we need to contact you, and also we need to put you in touch with also our warehouse guy, because they will then contact you so that they can then ship the material to you. Okay, right. Okay, great. So that's the interactive exercise 2, and that actually brings us to our end of our presentation, which is we've done live trading right now, we've done stops to cash strategy, I've answered some of your questions, and if you do have any further questions as well, you're more than welcome to ask us those questions. Okay, great. Right. Any questions at all that you all have at the moment before I pass it on to Rishi for the next part? We can also take, if there are no other questions, we can also take a short break as well before we resume. But before that, I'm happy to take any questions at all in the next 5 to 10 minutes on the strategy that we just reviewed, stops to cash, and anything else as well, really, to be honest, for that point. Okay, yeah, congratulations, guys. I'm happy. Why does specify 11 a.m.? This is a really good question. CS, we have asked about this 11 a.m. Now, we have found that statistically, at the 11 a.m. point, it's the 11 a.m. It's a really good reversal points to happen in the market and for stops to be taken out. So that's why we look at the setups to happen only after 11 a.m. Okay, after all the volatility has come down as well. And also it's a changeover of time from the UK to the US where they're all coming in together as well. So that's a good time to look at. All right. Another thing that I can also tell you all in terms of to increase the edge for you all as well is that when you do not get a price action setup to go long on the stops to cash before 12 o'clock, then I would say do not take any more trades for the day. Okay, this will put the edge onto your side as well. If the setup doesn't happen before 12 noon, do not take the trade at all. All right. This is one more thing that can really put the edge onto your side. Any other question? Does that answer your question, CS? Okay, brilliant. Any other questions? Okay, good. I guess if you all have any other questions later on, you're more than welcome to ask us. At this moment, I'd just like to say congratulations on those really winning the prizes. I look forward to seeing you all at Traders Base Camp. I think so far, I think all the others have given us the contact details so that the warehouse can then contact them to ship the stuff. I think it's only Liam, which we do not have the contact details for. I guess we got email but don't have your phone because then the warehouse can't really contact you and all that to ship the stuff to you because they won't do that until they get the confirmations. And also staff need to contact you as well so that they can link in all the details with the warehouse guys. So just pass that over when you get the time. I think other than that, I think right now what we'll do, we'll take a quick 10-minute break, and then after that, then Rishi will start with his analysis, and at the same time, we'll start analyzing and monitoring the positions that we have at the moment. Okay, so that's all from me for today morning. And as we always say, till next time, stay disciplined, follow your trading plan, and keep trading like a master.
Thanks very much, Thiru, for that. So I'm going to be taking over in just a couple of moments with an analysis of some of the end-of-day positions actually that we placed, swing trades that we've placed in our live trading room, and I'll be showing you the price levels that we've actually entered in at last night. So stay tuned for that. We have a trade on the lift of 2.0 and several pending orders as well on our dynamic breakout trading strategy, all of which we'll be going over in the next couple of days in this live trading week event, kindly hosted by Simon Campbell of London Investment Week. My name is Rishi Patel, co-founder Master of the Markets, the Elite Traders Conference, and the Trades Open Day. Stay tuned, and we'll be resuming in just a few minutes with the rest of the live analysis and how we're going to monitor the pound dollar position, which is currently running in an open profit, and also the profit expansion presentation, which I'll be running in just a short while as well. Okay, welcome back here to this session here on Live Trading Week. So this is an event running from the 10th of January through the 12th of January. It's a 3-day event, and I'm going to kick off by doing a little bit of live analysis on some end-of-day trading positions. So I'm going to be showing you what we're looking at in the Master of the Markets live trading rooms on the swing trades that we're running. I'm also going to be showing you one of the trading strategies that we use that we're constantly developing and improving. So it's called the profit expansion strategy. And then we're also going to go ahead and, of course, we'll be going through and at 10 a.m. we're looking to manage the trade that we're running on the pound dollar as well. So we'll have a trailing stop opportunity on that one. So be on the lookout for all of that. We're going to be doing that. And then, of course, I'll run a Q&A with any of the content that I've covered. Be happy to answer any questions. So before I kick off, I just got a couple of questions for everyone. If you could just punch something into the chat box, that would be very useful just for me to get an understanding of where everyone is in the trading space, really, in terms of your trading career, what you've done so far, what you're aspiring for, and of course this will help me to just pitch this at the correct level. So if I can find out that everyone's got a little bit of trading experience, that'll be very helpful, because I can make it a little bit more intermediate. If I know that more people are beginners, then that will also help as well, because I can, of course, go in at the right level to help with you all. So first of all, I'd just like to ask, who here has actually seen Master the Markets, either myself or Thiru, deliver a presentation before in the Round the Clock Trader, or any of the live trading webinars we've done, or any of the Round the Clock Traders we've hosted with Simon? Do let us know. Just you can punch a Y into the chat box if you have, or an N as well. That will be useful just to gauge an understanding of people who have and haven't seen us worked before. So. Okay, so there's a mixture of people, it looks like, quite a few answers coming in. It looks as though most people have seen us deliver presentations before, which is great. Superb. Okay, that helps me out, because that will just give me a little bit of an idea as to how much we need to talk about our backgrounds and things like that. Give me an idea of how much trading experience you have in terms of months or years. So thank you very much to some of you who already punched that information in, and that would be great to know. So 1Y, 5Y, 2M, whatever it is in terms of months and years of trading experience will be really useful to get an understanding of. Be it live or demo or whatever. I mean, just looking at the charts really, and just being involved with the markets in some capacity will be useful for me to get an understanding of, so that we can. Okay, so most people have quite a bit of trading experience here. One thing that I would recommend for those of you that are new to this, we do have a trader starter pack, which can get you going on the core basics of Forex trading, which is a superb set of videos which we've designed, took a long time to design. And it has got all of the core information in that you need to get started and get up and running. So you should check that out. You can go to traderstarterpack.com and you can just click onto that. But it looks to me as though most people in the webinar this morning have at least a couple of years of trading experience, which is great. So then I can just tailor the presentation accordingly, which is good. So let's go over to the end of day positions that we're currently running here in the market, and we've just introduced a brand new trading strategy into our live trading rooms. We call it the Liftoff 2.0. Now on Thursday, actually, I'll be walking you through the basics of the Liftoff 1.0, and actually walking you through how we have evolved the trading strategies to actually give us the Liftoff 2.0 as well, and looking at some of the core parameters for that. So what I'll do now is I'll just walk you through a couple of trading positions that we have placed, and so that you can have a look at exactly what it is we're doing. So we are looking at the dollar against the Japanese yen. We actually placed this position yesterday on a limit order. And I'll give you, I won't go into the exact detail as to why we've placed this trade at this time or anything like that. What I will do is I will do that in much more depth on Thursday, but I just want to make you aware that we are running this as a trading position at this time. So we have on the, let me pull open a little marker here actually, which will help me to illustrate. There we go. That's much better. Okay, so on the Monday we had something that of course looked a little bit like this. We had this buyer bar that came into the market just here. This buyer bar actually satisfied the criteria for a Liftoff 2.0. Again, the parameters of which I'll explain in more detail in the next coming days. However, what I wanted to do is just make you aware that we have placed a position here to go long on the market. We actually placed it on a limit order. So we looked for the price to actually pull back. I'm going to check the exact level in just a second. I believe off the top of my head is 116.25 was our entry into the market. So we actually placed this on a limit order because the current price was up here. So we looked for the pullback on the Monday. In fact, this happened on Friday. So on Monday, we looked for the pullback, and then you can see that we were triggered into that trade pretty late yesterday evening, and our stop is currently positioned under the low of this bar just here. So that's our stop loss. What I will do in just a moment is pull open the journal. I'll punch the exact trade details actually that we're looking at in terms of this swing position into the chat box. So this is currently running in a small floating loss of around about 20 pips at the moment, but we're looking to hold this for around 300 pips, and I'll show you exactly what the plan is with that in just a moment. So let me go ahead and pull open the exact levels. So we're looking to enter the market here on the dollar yen at exactly where I said 116.25. No. Okay, yeah, I got it. Okay, so just before we carry on, Terry's just informed me that he has placed a new opportunity on the Euro US dollar. So the entry is at 105.98. Can everyone see the? Can you just punch a Y into the chat box to let us know that you can see this stuff? Because obviously it's a live trading event. We're placing trades live, and there's sort of very little point unless you can see what we're doing. Okay, great. So please punch a Y and just interact with us here so that we know that it's happening. Otherwise, we may as well be talking to ourselves, which I do sometimes. It's not best. It's not best practice, but it does happen sometimes. So yeah. Okay, so most people can see that. Great. So I'll just verbally shout this stuff out. So you can see euro dollar. We placed it to go long at 105.98. The stop loss is 1.0572. There's a take profit of 1.0657. In fact, I'll show you as we have this open. I'll show you graphically, and I'll come back to the dollar yen. I'll show you graphically on the chart exactly what we're looking at just here. There we go. So we're looking to go long on the euro dollar 1.0598. That's here. Currently just hovering around the entry level at the moment. You can see that. And we're looking to place a stop order at 1.0572. So that is on the low of this bar just here. 1.0572, and then our take profit is at 1.0657. So just if you are observing these trades, then just so you know that that is hovering around the entry point at the moment. So there's an opportunity just there. So that's the euro dollar 1.0598. The stop is 1.0572, and the take profit is 1.0657. Just going back to my end of day analysis, then I'll give you an opportunity to have a look at that trade before I carry on. But just going back, then I'll go back to my end of day analysis on this dollar yen. So we placed a limit order of 116.25. That's represented by this blue line just here. Just drop a little note in as well to make it a little easier. There we go. That's where we went long the market. We were looking to position a little stop just here. So this is 115. We have a look at exactly where we placed the stop according to our trade journal. 115.04, so 115.04 is where we placed a stop. Which is on the low of this bar just here. There we go. We'll mark that in red just to make it clear. And of course, the take profit in this case, we were looking at a take profit of, just referencing my journal at the same time to get the levels exactly correct. 118.77 is where we're looking to get out of the market. 118.77. It's just above this swing high just here. $118.77 is just there. So that's our take profit. This is what I'll do as well is I'll punch these details into the chat box so that we've got a record of that trade opportunity there as well. Just mark this target off in green. But I just wanted to fill you in with what we were doing from a swing trading perspective at this time. So 118.77. Okay, so just punch the details into the chat box all for you there as well. There we go. USD JPY. This is what we call a liftoff 2.0. It's a swing trade. And the entry is 116.25 stop loss. And again, on Thursday, I'll go into exactly why we positioned the entry, the stop, the take profit, and everything the way that we did. But in the meantime, I'll just let you know in the loop as to what we're doing there. So that's the swing trade that we are actually working on there. So the target on the euro dollar, someone's asking the target on the euro dollar is 1.0657. That's that one just there. 1.0657 is the target on euro US dollar. Okay, so good. So we will just continue on. I want to just walk you through one of the key strategies that we've been in the process of building here at the Master of the Markets live trading rooms, and especially specifically in the elite team, where we actually put together these key trading strategies, which we then trade test and do everything with professionally. So that's a great environment in which you can actually see how profitable strategies are built from the ground up. And that's something that we have opened up on a very limited basis to people who are really serious about making money in the financial markets, but then also getting the deeper understanding of why things are happening the way that they are. By now you'll have seen that our approach is quite mathematical. It's definitely not for everyone. We are only really looking to work with traders who want to apply some of their time to gaining a strong understanding as to what we're doing, why we're doing it, and then really do some of the testing along with us, then roll out the strategies and make money consistently in the market with us as well. So what I want to do is just transition over to my profit expansion presentation. I think what I should do is just mention the risk disclaimer as well, because I noticed that we're, purely for educational purposes, punching out a lot of trades here in real time. But you should just understand that everything that we're providing here is really for an educational purpose only. And of course, we're not providing any financial advice here because we're not authorized to do so. And you should be aware of all the risks associated with foreign exchange. Seek advice from an IFA if you have any doubts. So do note that, that's printed there. Just disclaimer, that's myself. And most of you have seen me deliver presentations already, so I won't go into my background, a little bit about the business. We do deliver transparent track records in terms of our trading. All of our research-backed systems is all printed and published transparently. Everything that we do in terms of trade research is everything that we do in terms of trade research is very much something that's printed transparently and in real time. In fact, Thiru just tells me that there's another trade that's just set up as well here. So let's just quickly review that. On the dollar against the Swiss franc, let's just pull open the relevant chart here. And I'm aware that I won't have everything on the chart good to go, but the levels are as such. Again, just want to check everyone can see the levels that we're printing here. So the entry on dollar Swiss 101.32, stop loss 101.56, and the take profit is 100.78. Someone's asking me if it's a short trade on the dollar yen. The trade is long on the dollar yen. That's why the stop is below the entry. But the dollar Swiss trade that we've placed is also short as well. The entry on that, you can see, is published in the chat box. That is a short trade. And that is 101.32. Stop is 101.56. And 100.78 is the take profit on the dollar Swiss. Just want to check if everyone's comfortable with that before I carry on talking about what I'm talking about. One, that everyone can see the levels in the chat box, and two, that you sort of understand that we've actually placed that now. 101.32. If we have a look on the dollar Swiss. Okay, so this one we're going to place a limit order on. You can see the price is just currently a couple of pips below where we'd like to enter, so this is a sell limit more than anything. So we'll monitor, of course, to see if that's filled, and then we'll trade accordingly. Okay, so that's the dollar against the Swiss franc. Can everyone see the levels in the chat box? Punch in a Y just to say that that's okay. I'm sure you're busy analyzing your charts at the moment, but as long as a couple of you can see the trades, then I know that everyone can, and then that's very useful for me to know. That's brilliant. That's great. So all of the levels are in there, and I'll just clarify that. Great. I think what we'll do is we'll just take a 5-minute break. We're going to put our mics on mute. This just gives you an opportunity to do your own trade analysis, actually, because there's quite a few new trades that we've actually just placed. And I'm sure that you'll want to actually look at the charts and just have a look at exactly what we're doing. So I'll give you about 5 minutes to do that. We'll put ourselves on mute, and then I'm going to carry on talking about the profit expansion strategy. Okay, welcome back to the analysis, and we obviously just placed a couple of trades there. We've given you an opportunity to have a look and do your own analysis. I'm conscious that you'd want to have a go away and have a look at the chart while we are, as we're calling these opportunities for your information. So just to summarize really where we are with these positions, the euro dollar, we placed an entry which was pretty much live at market. The entry is 1.0598, the stop 1.0572. The dollar Swiss, we've also placed an order as well. It's a limit order because the price is just a couple of pips below where we would like to have entered. So the limit order was placed at 1.0132, stop at 1.0156. And finally, the cable, which is running live and in real time, that one we placed much earlier this morning. And that one we have placed short at 121.44. The stop is at 121.83. At 10 a.m., which is in about 4 minutes from now, we're going to look to see if we've got any trading stop loss opportunities on that pound dollar. So we'll look to see if there is an opportunity to trail the stop to minimize any downside risk, and we'll come back to that very shortly. So with that in mind, I will go back to my presentation, and then of course we'll analyze to see if there are any opportunities for either one, new trades, two, trading stop losses, and anything else in terms of questions that we can answer on this live environment. So just before we go back in to the live session, I will just say as well, I did just give you a swing trade opportunity, just made you aware of that, that we've just actually placed on our Liftoff 2.0 trading strategy. It was on the dollar Japanese yen. Someone was asking me if that's short. The answer is no, it is long. This trade is long. The entry is 116.25. The stop is 115.04. And the take profit is at 118.77. So that is the dollar yen, and that is a swing trade. So we're looking to hold that over a period of days. I don't expect that to hit its stop or its target in sort of a single day. It's quite unlikely. So we'll carry on monitoring that and see how that pans out as we go through. Okay, so let's go back over into our presentation. Bear with me just a couple of moments while I load that all up. Okay, so masterthemarkets.net, that's our website. It's a brand new website that was put up just into the early part of last year, so do check it out when you get an opportunity. We have a superb blog on there as well, and actually what I will do is I'll get one of my colleagues, maybe I will ask Milan if he's actually in the room, to just drop on there a link to our YouTube channel, just give you an opportunity to actually subscribe to that. If you haven't already subscribed to our YouTube channel, it's well worth doing. The reason for that is because you will definitely want to be aware of all of the new blog videos that we're releasing. Actually, some of the content that we are releasing on our blog presents so much value, much more than what I've seen on actually some people's paid courses as well. So actually you can learn a great deal from some of the superb content. It's really taken us a long time to draft this content and put it together. But it's what we were doing naturally for our own trading systems and our own research anyway, which really made it very natural for us. But it is superb material, which I believe is well worth actually investigating and looking at and researching. So if you haven't already subscribed to our YouTube channel, there'll be a link, I'm sure, in the chat box shortly. And then you can, of course, have a look and go ahead and place a little subscription there onto the channel, and that will bring you up to speed in terms of everything that we're doing. So with that said, I will transition over to the rest of my presentation. As in Thiru's presentation as well, and as in all Master the Markets presentations, we have prizes to be given away. One thing we're going to do very quickly here, just before I carry on, is just trail our stop on the pound dollar. We're going to trail our stop to 121.59. So in fact, I'm going to do that as well with the trades that we're running. So bear with me. Okay. Okay, so 121.59, great. We've trailed our stop. I'll just give you a couple of minutes. I'll just give you a minute or so to look at the screen if you want to do something similar. In the meantime, I'm just talking about the prizes that we're giving out. On Master the Markets presentations, generally speaking, all of the time there'll be prizes, there'll be giveaways. We always like to keep things interactive, and the reason for that is because we want you to gain maximum level of value, retain the maximum amount of information. And so we've just found, actually not us, but through research, it's been found out that if we can keep things interactive, then you can retain the most amount, which means that we can serve in the very best way over here, which is what we're keen to do. We're really keen to establish what we're calling the truth of trading, which is actually transparently publishing live real-time results, actually trading the market live, transparently real-time with exact trade management and exactly how we do things. So we want to really just be able to come across as this this training business that puts trading first and very much has trading at the forefront of everything that we're doing, because we're trading the market professionally ourselves anyway. Educating people and filling people in on what we're doing really comes naturally to us because it's a part of what we do. It really allows us to grow the team, which is really what our core objective is. We really want to work with traders who are dedicated to making themselves profitable, to ideally making themselves transition from having a JOB over to perhaps trading the market full time if that's something that they want to be able to develop. So that's our really ideal case scenario. So we have these fantastic interactive workshops, and on these workshops we're actually able to cover a lot of content which starts at a beginner level but actually transitions all the way over to having some material that even intermediate advanced traders, I've come across traders that have been trading for 10+ years that have been taken aback by the quality of the content and material that they receive on this 2-day workshop. So we are giving away some prizes on this, so do be aware of that. And in the profit expansion presentation specifically, I'm going to be showing you some real-time trading with real cash, which we're doing live actually in real time at the moment. We're running the trades that we've called, and the pound dollar we've just trailed there as well. The profit expansion strategy review and the Q&A. So that's the profit expansion just there. My colleague Milan has pasted in the link there for our YouTube channel. So if you click onto that and click the red subscribe button, what that will do is it will shoot you an email every time we upload some new content onto our blog. You will have sort of access to that immediately. And there are some superb topics in there. I've covered things like when to get involved with, which brokers to get involved with, you know, people that we trust in the market, how to research the market, how to build a consistent, quantifiable trading system. Thiru's discussed plenty of topics on there as well, which, you know, all types of interesting things. How trading relates back to a juice blender is coming out pretty soon as well, which will be an interesting one, which is really interesting approach into the market. So I'd really strongly recommend click onto that link and subscribe to the channel just so you get the updates. Let's go over to the profit expansion. The concept of the profit expansion strategy was to capitalize on market compressions, and these were usually a sign of accumulation, usually a sign of pressure building up in the market, where we then can look to capture either one, manipulation spikes in the market, or two, the profit release section of the market makers methodology. What is the market makers methodology? The market makers methodology talks about 3 key phases that any market, any time frame, generally speaking, will go through. And we've also got 3 key phases there: the accumulation phase, the manipulation phase, and the profit release phase as well. So those are the three key phases that we do see. So accumulation first, that's what happens first. Then we get to manipulation. And then of course we get to the profit release phase just there as well. So that's basically what we are looking at this time. And the profit expansion looks to capture either the manipulation or the profit release. That's the core goal. So what is this? It's basically based around insider bars. If you have a bar which is fully engulfed by its previous bar, we'll class that as an inside bar. Even if it's engulfed by 1 pip or a half pip or whatever it is, really it's an inside bar if it's engulfed the market by the previous bar. That's the core definition of that. Everything that I'm about to show you, by the way, is compiled by what we call the elite team here at Master the Markets. So we have in-house, we have quite a few resources here. We have a great team of traders that tailor for all difficulty levels in terms of competency, from beginner traders through to intermediate, through to advanced traders. So if you are struggling, if you've built a trading strategy, you're struggling to get maybe the consistent profitability, we've got traders that are specialized in helping you to do work like that, to help you to get that to be profitable. May not necessarily, definitely won't necessarily be myself or Thierry that will be doing the front end coaching, because we have a great team of traders. We generally only work with the elite team, but there is a great opportunity to interact to make progress there. So let's talk about the profit expansion. We tested in the market before we rolled this out live. We tested 5 key exits for the profit expansion, which was measured over a 3-year period from 2012 to 2014 on the euro dollar, the pound dollar, dollar yen, euro yen, USD, Swiss franc, and Aussie dollar. We tested all 6 of these currencies. Everything that we did was based on quantifiable parameters. 4 degrees of freedom, meaning that we looked for 4 reasons to get involved with the market as a minimum before we got into the trade. The trend was identified only by price action and using the smart money indicator, which is based purely on price and price action, nothing else. We also looked and investigated waves, phases, Fibonacci extensions, retracements in order to fine-tune our entries, in order to be able to refine and get the very best entries into the market so that we really trimmed down and just took out the quality opportunities. Stops were based on technical information and always kept consistent just there, and our entries were kept consistent as well. Snapshot of the trade journal, to show you more detail in a little while. 5 exits that we tested here in the market on the profit expansion strategy. So we actually kept the entry and the stop consistent so we could actually test which exit would be optimal. A lot of the time, out of the 20,000 plus traders that we've met, mentored, coached, from beginners through to intermediate through to advanced, generally speaking, the majority of people struggle with getting exits in the market. And they may be able to get into a superb opportunity. They may be able to get into a fantastic trade which takes them towards profitability, but they don't know where to get out. How long should they hold that for? Should they cut it out early? Should they scale in, scale out? What should they really do with the opportunity? And so one of the things we wanted to be very tight on really here was the exit in the market just here for the profit expansion trade strategy. And so we tested again on a quantified and consistent basis 5 core exits, and we wanted to see which one fared the best. If I showed you the actual exits graphically, it will make a little bit more sense. So the first exit that we actually tested here was on the high of the previous bar to the inside bar. So let's say, let me just grab my pen tool here. Here we go. So if this is the inside bar, if we're actually entering on this bar just here, and we're taking the market long, let's say for example on the high of that inside bar, what we have is we have a previous bar to the inside bar. I'm going to call this IB minus 1 for the purpose of this presentation. So IB minus 1, so that's what we had. So now if we take for example the first opportunity, the first exit that we tested was what would happen if we got out on the high of IB minus 1. taking into account we'd take this trade long because of the trend, because of other various factors that we've tested. If we were taking this long and the next bar were to spike up like this, what would happen if we got out on exit 1? We tested that exit. Now remember, we tested this exit for 6 currencies over 3 years. I believe there were 225 trades off the top of my head for this insider bar trading strategy. We tested 225 times to see what would happen on exit 1. We also tested this one here, exit 2, which is what happened if we got out if and only if this bar closed above the high of the IB minus 1. So you can see that the close here is above the high of IB minus 1. What would happen if we closed out specifically on that particular exit just there? The fourth exit here was, I'll come back to third exit, the fourth exit was what happened if we got out on the previous swing high or low. So what we're finding here is that this is the previous swing high or low. If we held and waited for that trade to go up and potentially take out the previous swing high or low, what would happen in that case? So that's what we looked for on exit 4. That was one of the key things just there. Then we looked at exit 3. Exit 3 was a close on the third buyer bar. Didn't necessarily have to be consecutive. It is in this graphical example consecutive, but even if it wasn't, we just looked for 3 buyer bars before we closed out at market. We asked ourselves the questions over 225 trades. What would happen if we exited after 3 buyer bars? And the final exit that we tested was after 10 bars. What would happen if we just got out after that? Now we tested the market on over these 225 trades over 6 currencies over 3 years, and we tested all of these exits simultaneously through the testing, which we done in a very, very methodological and clear quantified manner. And that allows us to take the back testing and then reproduce the results then again in forward testing. So that allows us to do all of that. So that's the core of what we put together for the profit expansion. The results that we got on the back end of the testing actually were fascinating. We got the results for which exit would fare the best, and also by how much as well. But not only that, the nature of the journal that we had, we were able to actually track, and we were actually able to understand not only that, but some key metrics as well, such as drawdown. How much of a drawdown does each particular exit also take? Over what period of time? Over how many months? All of this was answered. So that's basically what we had put together. And you can see here that we've got those 5 exits. How do we go ahead and trade the profit expansion strategy, I guess, is the next question. I'm going to show you that. So on the daily time frame, we're looking for an inside bar to form. Remember, an inside bar is defined purely by the current bar being fully engulfed by the previous bar, even if it is by 1 pip. Now, depending on the direction that we're taking, we'll enter either on the high of the insider bar or the low of the insider bar just there. So depending on where we're going to enter the market and where we're going to, what the trend is, we'll enter either on the high of the insider bar or the low of the outsider bar. So we'll add a couple of pips for spread on the entry high, so we'll add 3 pips here, and we'll take away 1 pip just here on the low of this IB, just to give it some space. But that would be, in essence, our entry into the trade opportunity. So that's the entry into the market. The stop loss just here is looking at going on the low of the IB minus 1. So what does that mean? Again, just to make very, very clear, so if this would be the entry long on the high of IB minus 1, which is this bar here, will give us the stop order just on the low there. So that's what we're looking at in terms of the actual initial stop loss for the profit expansion. This setup is on the high of IB -1 as well. This is to go short if the entry was on the low of IB. The stop is on the IB -1. So if we were trailing the stop, we'd look for every 2 1-hour bars. And depending on the time frame that you're trading this on, you can look for different things. So if it's obviously on the daily, then we'll look for a trailing stop every two daily bars. And so we will just look to place a trailing stop loss every 2 seller bars just there. So if we can get that, then of course then we'll look to trail the stop loss. That was the opportunity there. I trust that that element of all of this is clear, and then that makes sense. Are there any questions on what we've been through so far in terms of the entry, the stop, for how this profit expansion strategy is working? If there are any questions, I'll be happy to answer them at this time. And then we'll discuss the target. And again, at the same time, if there are no questions, then punch an N into the chat box so that I know that you're clear as well. But the interaction always helps us, especially with this quite large number of people that we have in the session this morning. It would be good to just get a good understanding of where everyone's understanding is, so that I know that I haven't maybe gone through things too quickly, which sometimes I do because very passionate about what we do. Which of the 5 exits was most profitable? Yes, I'm coming to that. That's always an interesting one to answer. So yeah, it looks like everyone's pretty clear on that. This is more like a breakout strategy. Yes, I would say that that's true. This is a breakout strategy. This is breakout from the inside bar itself, and breakout from the accumulation that has built up over a period of time. So yes, I would say that that is very true. In terms of the target that we look for is the close above or below the IB -1. Why is that? Because that was the most profitable exit, and in a short while I'll show you the statistics for that as well. So this is IB -1, IB -1. So you can see that that bar here in the graphical example is closed above IB -1. The close, note, the close is above IB -1, and that's where we'd look to close that trade out. So we'd look to close that at around about 9 to 10 p.m. when the market will of course become really quiet, and that will be the opportunity to go ahead and just close out that opportunity. So we would look to do that. The reason for that is that was the most profitable exit, and I'll show you the numbers for that in just a short while. So let's move on, and I believe we have an interactive exercise. This is the final interactive exercise of the day. A little earlier this morning, I noticed that when Thiru was asking his questions, that there was actually a mad flurry of answers that came through, and I see that lots of people actually wanted to go ahead and win a prize. This is your final opportunity to do so today. So if you didn't get an opportunity to win a little bit earlier, because I think we had multiple answers come through, you're going to have an opportunity just here. Just to be clear, the rules of the competition, I think we just sort of assumed that everyone knew. The rules of the competition are very simple. We're going to display a question, and to that question you need to supply the correct answer. Some of the questions are 2 parts. The next question I know for sure is 2 parts. You need to answer both elements correctly in order to be able to win the prize. And the prize, of course, is a discount to our Traders Essentials kit, a 50% discount to a fantastic set of tools which we've put together personally, which incorporate everything that a trader will need to be profitable in the market, a core set of strategies. So that's the core thing just there. So the Traders Essentials kit is the prize. Of course, along with that, you get a free ticket to the 2-day Traders Basecamp workshop. If you would like to have an opportunity to win that prize, all you need to do is answer the following question in the shortest period of time. What is the question? The question is, what are the 3 phases of the market maker methodology, and which phase does the profit expansion look to capture? So what are the 3 phases of the market makers methodology? And I can see that there are some very fast answers coming through. And which phase does the profit expansion look to capture? If you're able to answer that correctly, both parts, then I will be happy to award a prize. And I can see some answers are coming in so quickly that the spellings aren't quite correct, which is interesting, which is good, but I understand what you're saying, so not a problem there. Do go ahead and give it your best shot. And of course, I'm seeing a flurry of answers coming in at this time. Okay, so I want to say, first of all, congratulations to everyone that's entered. I think all of the answers that we've had through are correct, so well done. So it just comes down to who put in the answer the quickest. And I don't know how he did it. It was so fast I didn't even finish reading out the question. But congratulations to Alan Fernandez for getting the answer correct just there. So Alan, if you want to just shoot across your details onto the chat box, one of my colleagues, Milan, is on the webinar live. He'll pick up your information and he'll let you know what we need. So if you can just send him across that information, you need to send across your email and a contact number so that the back office team can get in touch and issue the prize accordingly. So that's the email address and a contact number. So do send that across. Alan, congratulations once again. Milan will pick that up, and the team will reach out and make contact at first opportunity. So we'll carry on, and we'll just go to the research findings. Question was asked, a very important question was asked, as to which exit was the most profitable. Which exit was the most profitable? So which exit was the most profitable? So exit 1, you can see here, said 258 samples tested. Exit 1 yielded a reliability of 54.26%, and that means that in an essence means that 5.4 out of 10 of the trade opportunities were profitable. We made money on 5.4 out of 10 opportunities. The net profit over the 3 years over the 6 currencies was 31.49%. Exit 2 gave us a 45% reliability. This time, we didn't make as many profitable trades, which is interesting. We only made 4.5 out of 10 of our trades made money, but the net profit was 69.03%. You can see more than double. Exit 3 yielded a much lower reliability and not as great net profit. Exit 4 and 5, again, very similar. But far outstripping all the exits was exit 2, and I'm pretty sure I've got a graphical example of that as well, just here. No, in fact I don't. I'll show you the graphical example on the spreadsheet. The next thing that we did, once we accumulated these results for these 258 trades, we then actually integrated a filter to help us to further reduce the number of opportunities. Remember, what we're looking to do here, our thing is very simple. What we're looking to do here is we are looking quite simply to go ahead and reduce the number of opportunities to just get the finer trades, to just get the opportunities which, of course, will give us the profitability with the most minimal amount of work. Let's think of it that way. So that's the goal, that's the key just there. So 258 trades we took on the general set of results. When we applied what we call the alpha filter was actually a concept that was come up with by, again, Thierry mentioned Toby Crable. And this was a superb tool which allowed us to further narrow down the trades that we were actually taking. So this actually gave us an exit 2, which yielded a 68.49% return, which is only a 0.5% or so less than what we achieved here in the general set of results. The difference being that we only took 188 trades to achieve near and on the same net profit. So you can see that the profitability that we expect, so our expectancy really, therefore, exit 2 on the alpha filter was 0.43, and the exit 2 on the R multiple, this general results was 0.26, so almost double. Interestingly, almost double. So that's what we yielded. So that's the reason that we use exit 2 in that particular market just there. So with that said, that concludes the information on the profit expansion. Are there any questions with regards to what we have, what we presented here in this very short presentation this morning here on the profit expansion? And if you have any questions as well for Thiru, I believe he's still online and with us, so I'm sure he'll be happy to answer perhaps any questions in regards to his presentations. We've got a little time now. Let's have a look at how we're doing for time. So we have around about 30 minutes. What we're going to do is use that time just to manage the trade opportunities that we have, just give you a little update on how those are fared, and also we're going to give you an opportunity to just ask any questions and interact at this time. And yes, absolutely, we're going to be very difficult to keep up with the note-taking on any Master of the Markets presentations because of how passionate we are about it, and the level of enthusiasm with which we talk about it sometimes causes us to speak quickly. So there is a recording. So if you've registered for the webinar, I'm sure that Simon very kindly will be sending out recordings to us very shortly. And the other place that we also log all of our recordings as well is very much our elite members portal, which we're just in the process of putting together. So be on the lookout for that. But yes, there will be a recording of this entire presentation, so nothing to worry about there. What I'll do is I will just put myself on mute here for a couple of seconds, and I'll just connect with Thiru to see if there are any updates with what we're doing, and then of course have a look at the market as well to see if there are any further opportunities for us this morning. Okay, so I believe we have completed this section of the presentation this evening. There doesn't look like there are any new questions coming in at this time, which is absolutely fine. Let me just go ahead and run this here. Yeah, it doesn't look like there are any new questions coming in at this time, which is absolutely fine. What we'll do is I will just connect with Tira to see if he has an update from his end in terms of anything else that he'd like to add. Okay, so I don't believe that there are any new updates. We are still running those trade opportunities which we have initially set up. So I believe we are on the euro dollar and the dollar Swiss franc at the moment. The pound dollar was taken out on the trailing stop. We had a small loss there. And so we'll look to see if the euro dollar and dollar Swiss can make up those positions. So we'll carry on monitoring those as we move through, and we'll provide you with an update into tomorrow's live trading week event. So tune in once again to see more live trades. We'll have a look at how we fared on our euro dollar yen swing trade position as well. And then we'll be happy to answer any questions as we move into tomorrow. So we look forward to seeing you all into tomorrow, where we're going to be discussing more news trading strategies. If I had a quick look at the agenda for tomorrow, I can see very quickly that actually we'll be looking to run the 15-minute swing profit trading strategy, which is a superb trading strategy for those of you that are intraday traders, something to look at and some creative parameters to consider on that one. And of course, we'll be placing more live trades according to the Morning Glory system. And we will, of course, then also be looking at the liftoff. I can see is scheduled for tomorrow as well. So I can actually show you a little more in depth as to why we took that dollar yen trade. I can show you the liftoff 1.0 trading strategy, and I can show you how we upgraded and adapted it to make it into the liftoff 2.0 trading strategy, and what the signs were to go ahead and upgrade that. So I will give you one final opportunity to ask any questions, and then if there are none, we're going to be looking to close the webinar out for about 10:40. I'm going to put myself on mute to give you an opportunity to ask any final questions. If I've missed something, then please do let me know that I've missed a question. I'll be happy to answer it. Of course, not my intention, but the questions, there have been numerous ones as we started the webinar this morning. And of course, with such a large number of people in attendance, it is easy sometimes to miss questions that do get asked. So please do not hesitate to ask questions at this time. I will be here, so we'll hear it for another 6 minutes or so. We'll look to close out at that time. Okay, it doesn't look like there are any new questions coming in. I've got a couple of thank yous being sent across. Thank you to you, really, for attending, for being here, for being part of the energy. Of course, as you know, this is our passion, and to be able to talk about it in this forum to all of you is superb for us. We really enjoy that as an opportunity. We enjoy showing you what we're doing live, real time. We enjoy showing you the ups and the downs, and that's all natural part of trading. So we look forward to tomorrow, where we'll resume the education, live trading, and of course, as you know, until the next time, as we always say, stay disciplined, follow your plan, and trade like a master. Bye for now.